Is there a better way to give to charity than simply just writing a check? I'm Derek Mazzarella with Gateway Financial Partners. Today I'm going to talk about a unique way to give to charity that has some tax benefits that you may not be aware of. So it's called a donor advised fund. So one of the challenges that people have typically is they're usually either giving checks or they're giving stock. Let's say they want to be a little bit more tax effective and gift a stock that they own for a while that has a lot of capital gains, or same thing with a mutual fund. A lot of times giving that can be a little bit of a challenge because not all charities will have a brokerage account, which would be needed to accept either a stock or a mutual fund or some other type of asset that you wanted to give them. So a donor advised fund is a way around that, especially when you're looking at little charities. So a donor advised fund is really just a vehicle that lets you gift like you would to a charity. You gift it to the fund instead of gifting it to the charity directly, and the donor advised fund distributes that money to the charity of your choice. So why would you actually do that? And there's a couple tax reasons why. First, it's actually an easy way to gift a appreciated asset. So if you did have that stock or that mutual fund, you're able to actually just send that directly to the donor advised fund. You don't have to realize the gain, because the challenge if they don't take it is you have to sell the stock or sell the mutual fund, realize the gain, then gift to charity, then get the deduction. So it can be a little cumbersome. Giving directly to the donor advised fund can help save you a step and be a little more fluid. Second is tax deduction. So one of the challenges that most W-2 folks have is you're really limited on a lot of the tax deductions that you have available. So if you're itemizing, you can deduct typically your mortgage interest. If you're a student, you can deduct the student loan interest. But there's really not a lot of other deductions. You do have the standard deduction available, but gifting charity is another deduction that you have available. And one of the challenges I see, especially with pre-retirees, is typically the years before you retire are your highest income earning years. So you're generally going to be in a higher tax bracket right before you retire. Most retirees that I know of typically are in a lower tax bracket in retirement. So is it more efficient to give when your salary is higher and the deduction is more valuable, or would you rather give when your income is lower and your tax deduction will be less valuable? So if you're pre-retiree, you can actually stuff this donor advised fund with assets and with checks basically while you're still working, take a deduction when it's more meaningful, and then gift to charity actually later on, because the money that's in the donor advised fund will actually continue to grow. So you can actually pre-fund your charitable giving before you retire and then never have to worry about it again in retirement. So it actually will help free up some cash flow too. And the third reason to do a donor advised fund is simplifying the process. So let's say you're like Oprah out there, you're giving checks to 7 different charities. Now you've got to collect all these different tax deduction forms from each charity. It can be a little bit more of a cumbersome process. Your tax accountant will love you for doing this, because basically you're putting all the money into one fund, you're getting one tax form for the deduction, and then you can gift out to all 7 charities. So everyone stays happy, but it's a much simpler process for yourself. So there's really a 4-step process when it comes to donor advised funds. First step is you're going to give. You're going to give either assets, you can put money in there, you can shift anything else really in there that's of value. Next is you're going to get the tax deduction in the year that you make the contribution to the donor advised fund. So like I said, if you're in that higher income earning year, this would be a good time to do it. The funds can grow, so they don't have to stay in there for 2 years and you have to give them out, so they're allowed to grow for a while. And then when you're ready, whether that's next week or 3 years from now, you can gift the assets out to the charities. They just simply write a check, so you don't have to worry about selling anything. You do get that tax-free growth while the money is growing in the donor advised fund, which is another tax break for you. And you can even set it up so, look, I'm not going to give anything until I'm dead. So if you want to set a stipulation that says all of this stuff is going to grow over the course of my retirement and I will gift it when I pass away, that is definitely something that you can do. So a donor advised fund, just to recap, is a financial tool. It lets you gift to charity now, lets the account value grow, and it lets you pick the charities of your choice. As long as they're qualified nonprofits, you can gift money back out to them. So it could be a unique tax incentive way to help gift now and also help simplify your charitable process while you're at it. So I'm Derek Mazzarella with Gateway Financial Partners. If you like this video, please like and subscribe. If you want to keep it to yourself, don't tell anyone about it. That's okay too. I'll look for you for the next video.